The global remittance industry moves over $857 billion annually, and Western Union charges families an average of 7.73% just to send money home. But what if I told you there's a blockchain protocol that could reduce those fees to near zero while settling payments in seconds instead of days? Welcome to Crypto Journal. Hit that like button if you value this type of real-world use case analysis and want me to keep bringing you these deep dives on crypto, solving actual problems. And don't forget to join the channel membership, where I'll be uploading exclusive content just for members. You'll see the join button right next to subscribe. After what I'm about to reveal about the cross-border payments crisis and how Zebec is positioned to disrupt it, you'll understand why this could be the most important infrastructure play in crypto. We're in November 2025, and while everyone's focused on speculation and meme coins, ZEBEC Network has quietly positioned itself to capture a massive share of the $1.08 trillion cross-border payments market. Stick around because at the 19-minute mark, I'm going to break down the exact economics of how Zebec could replace Western Union's business model and why the cost savings are so dramatic that adoption becomes inevitable. Let me start by showing you the problem that Zebec is solving, because once you understand how broken the current system is, you'll realize why blockchain-based payments aren't just better, they're necessary. The global remittance market is valued at $842 billion as of 2024, projected to reach $1.2 trillion by 2035. That's money being sent by migrant workers to their families back home. People working abroad sending funds to support loved ones in their home countries. But here's the brutal reality. The average cost to send remittances globally is 6.35% according to World Bank data from the first quarter of 2024. In sub-Saharan Africa, the cost jumps to 7.73%, the highest in the world. When someone sends $200 home, they're losing $13 to $15 just in fees. For families living on tight budgets, that's food, medicine, school supplies. Banks are the worst offenders, charging an average of 12.66%. 12% just to move money across borders. And it gets worse. Traditional bank transfers take 1 to 3 days to settle, sometimes up to a week, depending on the corridor. Money transfer operators like Western Union and MoneyGram are faster, but still expensive. Western Union moves approximately $135 billion annually at an average margin of 3.2%. That's over $4 billion in revenue extracted from people sending money to their families. MoneyGram processes around $41 billion annually. Combined, these two giants control a massive portion of the market and charge premium fees for a service that blockchain can do for fractions of a cent. Now let me show you why this is a technology problem that requires a technology solution. Traditional cross-border payments are inefficient because they rely on correspondent banking networks. When you send money from the United States to the Philippines, your bank doesn't have a direct relationship with a bank in Manila. So the payment routes through multiple intermediary banks. Each intermediary takes a cut. Each adds processing time. Each introduces friction. This system was built in the 1970s when SWAFT, the Society for Worldwide Interbank Financial Telecommunication, launched. SWIFT connects over 11,000 financial institutions globally, but it's a messaging system, not a payment system. Banks send instructions via SWIFT, but the actual money moves through a chain of correspondent accounts. The result? Slow settlements, high costs, lack of transparency. You send money and have no real-time visibility into where it is or when it will arrive. This is unacceptable in 2025 when we have technology that can settle transactions in seconds at near zero cost. And this is exactly where Zebec comes in. If you're still with me, drop a comment saying near zero fees. I want to see who's paying attention to this cross-border revolution. Let me explain what makes Zebec Network uniquely positioned to disrupt the remittance industry, because it's not just about being faster and cheaper. It's about fundamentally reimagining how money moves across borders. ZEBEC Network operates on what they call continuous settlement architecture. Instead of batch processing payments like traditional systems, ZEBEC streams money in real time. Think about how Netflix streams video. You don't download the entire movie before watching. Data flows continuously. ZEBEC does this with money. Payments flow second by second, continuously, without waiting for batch settlements. For cross-border payments, this is revolutionary. A migrant worker in Dubai can send money to their family in India, and the recipient sees funds arriving in real time. Not tomorrow, not in 3 days, right now. The technical infrastructure enabling this is the Nautilus chain, ZEBEC's Layer 3 blockchain purpose-built for payment processing. Nautilus chain processes transactions with 2-second finality. That means from the moment you initiate a payment to the moment it's confirmed and settled, 2 seconds. Compare that to 3 to 5 business days for traditional bank wires. Transaction costs on ZEBEC Network are 1 ZBCN token per transaction. At current prices around $0.0036, that's less than half a cent per transaction. Let's put that in perspective. Western Union charges roughly $6 to send $200 to most corridors. That's 3%. ZEBEC charges $0.0036. That's 0.0018%. The cost difference is 1,667 times cheaper. This isn't marginal improvement. This is complete disruption. But cost and speed are only part of the equation. ZEBEC has built comprehensive infrastructure specifically for remittances and cross-border payments. Their flagship consumer product is WageLink, a compliant traditional payroll application with built-in Web3 features. WageLink enables near-zero-cost cross-border remittances directly from the app. Here's the use case. An employee working in the United States gets paid via WageLink. They can instantly convert a portion of their paycheck to USDC stablecoin and send it cross-border to family in Mexico, the Philippines, India, anywhere. The recipient receives USDC instantly, can hold it as a stable store of value, or convert it to local currency through ZEBEC's network of partners. The entire process happens in seconds. No banks, no Western Union, no 7% fees. Just near instant settlement at near zero cost. ZEBEC has integrated partnerships with Circle and Stellar specifically to enable this. Circle provides USDC, the most trusted stablecoin in institutional finance. Stellar provides the interoperability for cross-chain settlements. Together, these partnerships create seamless fiat to crypto to fiat on ramps and off ramps globally. But ZEBEC didn't stop at just software. They built physical infrastructure. ZEBEC cards. The ZEBEC Silver Card and ZEBEC Black Card are prepaid and debit cards supported by MasterCard's global network. These cards are accepted in over 210 countries. Users can load crypto onto the card and spend it as fiat currency instantly. For remittances, this is critical. The biggest barrier to crypto adoption for remittances isn't sending. It's receiving. If grandma in rural Philippines can't convert crypto to pesos easily, the system doesn't work. ZEBEC cards solve this. Recipients can receive USDC on a ZEBEC card and spend it anywhere MasterCard is accepted, or they can withdraw cash at ATMs. The card infrastructure makes crypto feel like traditional money, removing the friction that's prevented mainstream adoption. ZEBEC has also deployed over 100,000 point-of-sale terminals globally through their DePIN infrastructure. These terminals enable retail crypto payments, allowing merchants to accept cryptocurrency with instant settlement to fiat if desired. This retail infrastructure creates a closed-loop ecosystem. Senders can send crypto. Recipients can spend crypto or convert to fiat seamlessly. Now let me show you the market opportunity that ZEBEC is targeting, because understanding the scale is critical to evaluating the upside potential. The global remittance market is projected to reach $1.2 trillion by 2035, growing at a CAGR of 3.3%. But the remittance services market, meaning the fees extracted by intermediaries, is valued at $188.93 billion in 2025, projected to reach $341.76 billion by 2030. That's the addressable market for ZEBEC. $341 billion in fees currently being captured by banks and money transfer operators. If ZEBEC can capture even 1% of that market, that's $3.4 billion in transaction volume generating fees. At ZEBEC's current 1 ZBCN per transaction model, even a fraction of that volume creates massive demand for ZBCN tokens. The largest remittance corridors globally are United States to Mexico, United States to China, United States to India, United States to Philippines, and Saudi Arabia to India. These corridors alone represent hundreds of billions in annual flows. ZEBEC is strategically targeting these high-volume corridors with localized partnerships and compliance infrastructure. In 2023, remittances to sub-Saharan Africa reached $100 billion. Yet this region pays the highest fees globally, 7.73% average. This is where the impact of near-zero fee blockchain remittances is most profound. Families in Nigeria, Kenya, Ghana, Zimbabwe could save billions collectively by switching to blockchain rails. Asia Pacific is the fastest growing remittance market. India is the largest remittance recipient globally, receiving $79 billion in 2018 and growing steadily since. The Philippines received over $30 billion. Both countries have massive diaspora populations sending money home regularly. ZEBEC's partnerships with MasterCard, Visa, Circle, Stellar, and Algorand position them to capture these flows. They're not competing as a crypto startup. They're competing as a full-stack financial infrastructure provider with regulatory compliance, card networks, stablecoin settlements, and blockchain rails all integrated. Comment right now if you're starting to see how massive this opportunity really is. Let me break down the competitive landscape and why ZEBEC has structural advantages over both traditional players and crypto competitors. In traditional remittances, the major players are Western Union, MoneyGram, Wise formerly TransferWise, Remitly, and WorldRemit. Western Union is the 800-pound gorilla with approximately $135 billion in annual volume and $4.5 billion in revenue. But they're stuck with legacy infrastructure. Western Union relies on a network of over 500,000 agent locations globally. Physical locations with employees, rent, overhead. This creates a cost structure that prevents them from competing on price with digital-first solutions. Their average fee of 3 to 6% isn't greed, it's structural. They can't go lower without destroying their business model. Wise, formerly TransferWise, disrupted the market by using peer-to-peer matching. When someone sends pounds to dollars, Wise matches them with someone sending dollars to pounds, avoiding actual cross-border movement. Clever, but limited to liquid currency pairs. And Wise still charges approximately 0.5%, far higher than blockchain rails. Remitly and WorldRemit are digital first, but still operate on traditional banking rails. They're faster than Western Union, but not fundamentally different. They still rely on correspondent banking, still face regulatory friction in different jurisdictions, still charge meaningful fees. Now let's look at crypto competitors. Stellar has positioned itself for remittances with fast settlements and low costs. Stellar processes transactions in 3 to 5 seconds with fees under $0.00001. But Stellar is a protocol, not a consumer product. They need partners to build user-facing applications. Ripple and XRP target institutional cross-border payments, focusing on bank-to-bank settlements rather than consumer remittances. Ripple's on-demand liquidity uses XRP as a bridge currency, enabling banks to settle cross-border payments without pre-funding accounts. But Ripple's focus is enterprise, not retail remittances. ZEBEC is different because they've built the entire stack: blockchain infrastructure, consumer applications, card products, point of sale terminals, regulatory compliance, stablecoin integrations. They're not waiting for partners to build on their protocol. They're delivering end-to-end solutions directly to consumers and businesses. And here's the critical differentiator: ZEBEC is licensed and compliant. Through their investment in payroll growth partners, ZEBEC holds payroll licenses across multiple US states. WageLink is a compliant payroll application meeting all regulatory requirements. This isn't some offshore crypto platform operating in gray areas. This is a licensed financial services provider using blockchain as the settlement layer. For institutional adoption and mainstream users, compliance is non-negotiable. ZEBEC has it. Most crypto projects don't. Now let me show you the economics of how ZEBEC captures value from cross-border payments, because understanding the business model is critical. ZEBEC generates revenue from multiple streams. First, transaction fees. Every transaction on ZEBEC network costs one ZBCN token. As transaction volume scales, demand for ZBCN increases. This creates organic by pressure from real usage, not speculation. Second, card transaction fees. ZEBEC cards generate interchange fees every time they're used, just like traditional credit cards. These fees are small per transaction, typically 1 to 3%, but they add up with volume. And crucially, they don't come from the sender or recipient. They come from merchants, making the service free for users. Third, foreign exchange spreads. When users convert crypto to fiat or fiat to crypto, there's a small spread on the exchange rate. Even a 0.1% spread on billions in volume creates meaningful revenue. Fourth, premium services. ZEBEC offers early wage access through WageLink, allowing employees to draw a portion of their paycheck before payday. This is a premium feature that generates subscription or per-use fees. Financial inclusion products like this create sticky user relationships and recurring revenue. And fifth, enterprise payroll services. ZEBEC serves hundreds of companies for payroll processing. Enterprise clients pay for the service, creating B2B revenue streams beyond just consumer remittances. The business model is diversified across multiple revenue streams, all tied to real economic activity. As ZEBEC scales, these revenue streams compound. More users mean more transactions, more card volume, more foreign exchange conversions, more enterprise clients. And all of this creates deflationary pressure on ZBCN as transaction fees burn tokens while demand for gas increases. Let me paint you a realistic scenario of ZEBEC capturing market share from traditional remittance providers. Imagine a construction worker from Mexico named Carlos living in Los Angeles. Carlos sends $500 home to his family in Guadalajara every 2 weeks. Using Western Union, Carlos pays approximately $15 per transfer. That's 3%. Over a year, Carlos sends $13,000 and pays approximately $390 in fees. Now imagine Carlos switches to WageLink powered by ZEBEC. He gets paid through WageLink, instantly converts $500 to USDC, and sends it to his family's ZEBEC card in Mexico. Transaction fee, $0.0036. His family receives the full $500 and can spend it using their ZEBEC card at any MasterCard location or withdraw pesos from ATMs. Carlos saves $389.96 per year. That's real money. Multiply Carlos by millions of migrant workers globally, sending billions annually, and you start to see the scale of disruption. The switching cost for users is minimal. Download WageLink, link your bank account, or get paid directly through WageLink. Send money. The user experience is as simple as Venmo or Cash App, but with cross-border capability at near zero cost. For the recipient, get a ZEBEC card, receive funds, spend anywhere. Simple. The value proposition is so compelling that adoption becomes inevitable. Why would anyone pay 3% when they can pay 0.0018% for a better, faster service? The only barriers are awareness and trust. And as more users adopt, network effects kick in. Carlos tells his coworkers. They tell their friends. Adoption accelerates organically. If you're still watching, comment cost savings matter. I want to know who understands the economic disruption happening here. Now let me address the regulatory landscape and why it matters for Zebec's cross-border payment ambitions. Cross-border payments are heavily regulated because they touch anti-money laundering, AML, know your customer, KYC, foreign exchange controls, and financial licensing in multiple jurisdictions. Any solution targeting this market must be compliant or it will be shut down.